Today I'm going to talk about three stocks I think are extremely undervalued that I plan to buy this week, along with how I'm going to slowly rotate my set it and forget it account to generate at least $10,000 a month. So stick around, it should be a great video. Hello, my YouTube friends, and happy Sunday. I hope everybody's doing well. I hope everybody's enjoyed their weekend. Today, I'm going to start out by talking about three stocks that I think are highly undervalued and see good opportunity to get into them. I already own two of them. I kind of have a small position in the other one for full disclosure purposes, but I do plan to add on because I think it's such a good opportunity right now. So, stock number one, which I've talked about many times, is Target. And part of what I like about Target is everybody hates it. Now, the comments in the comment section, I'm sure I'll get them now, have begun to wane off a little bit, and I'm not getting so much hate, which tells me enough time has passed that people are beginning to forget all the negative things that drove it to the prices it's gotten to today. Now, what I really like about Target is the actual financials. It's trading at a current PE of 10. That is crazy for a stock that generates as much money as it does. It's also paying over a 5% dividend that it uses approximately 53% of their free cash flow to be able to pay. So that means there's tons of room for problems and errors and slowdowns and things of that nature. So I find that dividend to be really safe in a company that's been in business a long time that continues to do just fine despite all the negative that came around it. And if we talk about it, I know some think of it as like a Sears and eventually it's going to be useless and whatever else, but to compare it to a company that I'm surprised has done as well as it has, look at Best Buy, which continues to do just fine. And I'm not really sure what the value is in it because there's nothing you can get at Best Buy that you can't get anywhere else either. So Target's lost a little bit of its direction. It's changed from when it used to be thought of as Target, but it also went woke, then it wasn't woke. It's offended the Democrats, it's offended the Republicans. It's done all sorts of things to hurt its brand. On top of, if we go back a little bit, it was having all sorts of theft all over California and had to have a bunch of stores that they shut down. But the reality is, I think that's actually a good thing. If you're able to be in a position to close down stores that are not profitable or not doing great and really focus on the ones that grow and expand and do well, I see that as a net benefit for the overall company. That's what I really like about Target. And I also think we're getting to the point that the negative news has been out long enough that people are beginning to forget. So anybody in the comment section that talks about I'll never shop at Target again, my guess is either you never really did shop there or you went there very little and you're either forgotten about it. And if you're still yapping about it, I'd say you probably were never a big Target customer anyway, which is kind of my point about these long term, what's going on now, bad news on good companies. I just don't see Target being this awful company that's going out of business. When I drive past stores, their parking lot is full, there's people in there shopping, and they sell a lot of really good products. Now, I do think there's some things they could work on. I've talked about it in other videos. Their grocery section, for example. It seems like this half assed job of like, they don't really know what they are. It's not a full grocery, the prices aren't competitive. It seems like it's kind of put in there because if you're shopping for other things, maybe you pick a few things up at the grocery. But I think that's probably a mistake and a section of the store that's getting not the type of volume that it should for being in the store. What I've noticed when I go into the grocery section is, the area with the chips and the snacks and everything else, they're pretty competitive and things are just fine there and it presents well. But if you actually look at their proteins and their vegetables and their fruits, they seem extremely expensive. And I don't know if that's because they've done an analysis of how much they have to sell it for to be profitable, but maybe they shouldn't be pushing to be trying to be profitable in that food section. If the goal is to drive business in, maybe they just need to take a small loss or break even or whatever they need to do to be able to offer those services. Because if you compare that to Walmart, who has super cheap food and drives business into their stores because of it, I think that's a better model. They seem like this weird mishmash of, the prices are almost like Whole Foods, but the quality is not there. So it's like pick a lane, either one. Now, I don't shop for too much frozen food, so I'm not sure how that compares as well. And to be perfectly fair, I'm not a consistent Target customer, but I do go there, so I notice things because everywhere I go, I pay attention to customer flow and if they're buying things. The other thing is they've started reducing their staff, which has got to save on their expenses. I see that for 2026, they expect revenues to be down a little bit, but then they expect them to continue to grow from there. I even looked at insider buying and selling and noticed that the outgoing CEO is the only one who sold any shares, which makes perfect sense. And even though the numbers look somewhat big, the reality is it was actually smaller than the stock options he received. Nobody else is really doing much. They're receiving their stock options and chugging along just fine, which made me feel a little bit more comfortable that I don't see a whole lot of insiders selling a bunch of stock. Now, I would have liked to seen more of them buying some instead of just getting their stock options, but again, nothing that bothered me or was concerning. Their ratios are all great. I think their PE shows that they're just a super bargain right now. And if they hit their numbers for growth going forward over the next couple of years, I think you'll see the stock price increase. In fact, the average analyst estimate of where the stock will be is approximately $102 a share, which is a 13% increase from where it's trading today. So if it actually accomplishes that, along with the dividend that it's paying, that's great return. Beyond that, some of them have an estimate of getting up to $130 a share. And when I look at both a 5 year and a 10-year chart, the level that it's at looks like a lot of support going a ways back. So I think if it gets below, I think it was about $77 a share, that's where I would start getting a little bit concerned just in terms of looking at a chart. But outside of that, this area looks like an unbelievable opportunity. There should be a lot of support here. Maybe it drops back down into the mid 80s, but I think anywhere in the low 90s is a really good opportunity. Just be a little bit careful. They have earnings this week, so the stock has a history of having very big moves during the earnings, and it really could go significantly in either direction. And I'm not really making a prediction. My time frame is longer term. I'm looking for a 5 year investment, not a 2 week one. So I would say be a little cautious going on into earnings, but I would like to see a little bit of like what happened with UPS. I'm thinking that the news is in the rear view mirror enough that no matter what happens with the earnings, maybe we see a nice pop in the stock. Now, that's just my hope as somebody who owns it. So, the second stock that I think is a bargain right now is Meta. I don't think you get a whole lot of opportunities to buy Meta at a 20 PE, which is approximately where it is currently. The concern with Meta is they're spending a lot on CapEx again, which blows my mind away because if you go back to when it collapsed back in 2022, it was so overdone. I don't expect it to do the same type of pullback like it did back then, but I think right now is an incredible opportunity to buy a stock that rarely gets to these valuations. They own WhatsApp, they own Instagram, they have Facebook, 3.5 billion with a B daily users. So if they want to market something themselves, they're able to hit 3.5 billion people with really low expenses. The other thing is I'm a believer in Mark Zuckerberg. Anytime people get negative on him, he seems to do just fine. And when he was talking at the last meeting, he was comforting everybody that even with the spending that they're doing, worst case scenario, it's spending that they can use for their own company anyway, to be able to use that space to store data and everything else. If it's able to be used for the AI that they're hoping to and drive sales and push new customers and old customers spending more, I think you'll be really shocked by what the earnings could do. It was similar back in, geez, when he was doing the metaverse and everything else, that people were hating on it and selling the stock off because he was just so nuts. Meanwhile, over the years, he's been pushing sales growth in the mid 20s for a company as big as it is. And if that is what they're able to do with the AI that they're adding on now and all the things that they're spending to get ahead of the game, I think you'll be pretty shocked with how the stock can do. When I look at it, I kind of value it currently around $800 a share when it's only trading it closed on Friday, I think around 609 or 610. That's a great upside potential for a stock like Meta. Now, of course, it could sell off and it could continue to sell off just because in the short term, popularity and sentiment will drive stock over the short term. But over the long term, earnings and everything else is really what determines valuation in stocks. Now, as always, this is not financial advice. Please, I am not a financial advisor. You should not be listening to me when making any decisions for your own investments. You need to reach out to a financial advisor or do your own research. I talk about this all the time because what works in my life and the things that I need are probably going to be different than what you need in your life. And our goals are going to be totally different. And I'll talk about that when I talk about trying to get to $10,000 a month because my goals may not fit your goals. And I'm not always looking to outperform the market. Now, my brain is a commodities trader. I can't help think that way, but I know the reality of where I want to be and how I want my investments to work. And you should be figuring out that stuff for yourself. Now, stock number three. What is it? Chipotle. Now, maybe it's a little bit early, but the sell off that happened after the last earnings was finally enough to put it in a valuation range that it's getting attractive to me. I don't see it as a steal of the century, and I've actually been selling cash secured puts to be able to buy it below $30 a share. If it gets to 28 or below, that's where I start to think it's a real value. And this is not a stock I picture going straight back up or having huge returns or doing incredibly well, but I do think it's getting to a price where it's really fairly priced, and it's a company that I would like to own for 5 or 10 years. Similar to, I've told the story about McDonald's many times, Chipotle reminds me of that. It is a well established company, and quite honestly, when I go out for lunches, they seem pretty reasonably priced in comparison to other things. If my wife and I go there, we typically spend about $20. Well, going out to lunch and spending $20 for two people is really reasonable in the inflation environment that we're in right now. And I think you get a pretty good product for what you're paying for. The only thing is, what I noticed, at least at the one that we go to, I said to my wife the last visit that I was a little surprised by the attitudes of the people working there. And I didn't know if it was just in my head or for reality that they used to seem a little bit happier to be working at Chipotle. And maybe that's a little bit of what's going on at the company that they need to work on. It started to fall off after Brian Nickel left and went to Starbucks, which is kind of what I like about Starbucks. And ever since the stock has struggled, I do feel that as a company, they probably chug along just fine. And maybe there's some internal issues that need to be worked on. But overall, in 10 years, I have to imagine that they're still doing just fine, continuing to grow stores, able to push earnings and fix whatever kinks there are. I've heard a little bit on the internet of people being upset sometimes when they order, especially online, because they don't get consistent portions. Sometimes it's really small, sometimes it's really big. There's some easy fixes to some of that stuff. I used to have a restaurant, and you can buy things like you can buy spoons that are pre-measured to use the same amount every time. I think that might be a really good route to go to make it easier so they have a little bit less of this I get too much, I get too little, and people trying to trick the people behind the counter into giving them what they consider a fair portion. Especially for a company as big, it really should be universal. Any Chipotle you go to, that no matter what you order, you get the same amount and same thing every time. Either way, I think they serve a decent product. I think it's really reasonably priced. And I think whatever's going on, they'll figure it out. And over time, the stock will continue to grow. And lastly, how do I plan to make $10,000 a month in my set it and forget it account? Well, I'll thank Dividend or Gen X Dividend Investor for this because the more I watch his videos, the more I realize I want to be in the same type of situation and we have similar portfolio sizes. And there's really no reason I can't rotate out of big growth stocks into things that pay dividends. Now, understand, I don't think there's any magic pill or magic bullet out there or anything that hasn't been discovered by anybody. And a lot of these videos that talk about make this much per month and all you have to do is this really give some bad advice. Unfortunately, you need some money to be able to safely do the things that I'm talking about. If you're generating anything more than maybe 4% in a portfolio, you may be taking on risks that you don't realize. For example, those yield max funds that I hate so much, I don't think people even understand the risk they're taking on. But what I plan to do is take the stocks that have grown really well and start to sell more aggressive calls against them. And when those stocks get taken, which I think they will at some point, and those options are exercised, I'm going to start rotating into more dividend paying stocks. I built a combination of a bunch of stocks that some of them are a little bit higher paying dividends. Like right now, I like MPLX and I also like Hess Midstream HESM. But to be fair, I don't know that they'll still be in the position by the time the calls get taken because I plan to sell things that probably expire in January or March. But what my attitude is like recently Google had a nice run up. And from what I saw on Friday, Warren Buffett and his groups, well, not Warren Buffett, the new person taking his position, is buying into Google, which is driving the stock even higher. Well, when I see the stock go up like that, I'm going to use that as an opportunity to sell some calls for a future date where I'll use those funds if they get distributed. Like, that's not even the right word. But I'll use those funds in order to put it in dividends and start growing the account to where I don't have to pay such attention so much because I'd like to start taking that income and using it to pay bills and things like that. I'll try to remember some of the stocks. I know Conagra was in there, which I talk about a lot, which I've still been trading the options, and I will still keep my trading account and continue to do that stuff and hopefully push the envelope even further and grow some money there. But I also plan to buy Conagra, which or add on to it. I'll probably lighten up on some of the ones that I recognize maybe I have too much of, like Nextera Energy, which has been a great investment, but there's just no reason to have too much in one because if I'm going to start using those dividends, I want to have a nice array of stocks that if something doesn't work with one of them, I'm not too heavily invested in them, so I don't worry about each individual one. I also had T. Rowe Price and Prudential and Stanley Black and Decker, as well as Target, which we talked about today, who has a nice dividend currently. Um, Chevron, which is one that I'm actually going to keep a rather large position to stay in the oil and gas that way, even though the Hess Midstream as well as the MPLX are also in similar industries. Um, Man, I don't remember all of them, but if you guys want me to give the list to give you an idea, it did include some lower paying dividend stocks like Starbucks, as well as still keeping some growth stocks because I don't want to be 100% dividend investing. I want to keep some of my CrowdStrike. I do want to keep a position in OKLO, not because I believe in the company, but because why not take a shot in something? It was a small enough investment that I should let some of it ride, and I had some others in there that don't really pay dividends because I want to keep Meta and Amazon and Google. Even though Meta and Google theoretically pay a dividend, it's so small that I don't really count it. But it's not like I'm going to get rid of those stocks. I just figure that I can pare down on them because there's no reason to be so heavily weighted into just those. So I'm slowly going to continue to rotate or start rotating out of some of that stuff and rotating into some dividend stuff that's a little bit more boring. It's also why I say, sorry, I'm trying to shift away from the sun. It's also why I say not everybody has the same investment goals because I do not think these will outperform the market. I think I will underperform the market. But the reality is, I have no need to outperform. What I need is a little bit of security and some income coming in to help pay the bills. Part of the reason I push are for personal reasons of like my son going to college and things in my life that want me to make a little bit more money and that our monthly bills are probably higher than what most are. So I push to have a higher income coming in. But we're getting to a point that it is time to rotate. So if you guys find yourself in a similar situation and want to have an understanding of the things that I'm rotating in, just let me know in the comment section. We'll talk about it a little more. I'll go through the list of the stocks that I had written down if everybody's interested. Oh, one that I really thought was interesting was MTN, which is essentially the snow mountains or the ski mountains out in Colorado that I thought was fun, and it's paying a 6% dividend with a pretty good PE ratio. I haven't dug into it, but as somebody who skied growing up, I thought that was kind of fun. Anyway, before the sun really drives me nuts, do me a favor if you haven't already. Hit that subscribe button, smash the like button, make some comments in the comment section, and don't forget Tuesday, 11 o'clock Pacific time, I will do the live again. If I have time to edit this video and potentially do another one with Jacob later about the puts and calls that he may sell on his stock account, I may do a second video later today. The other thing is I'm going to start talking to him about going out to like a monthly option because I think it makes more sense that he only look at it once a month instead of every week unless he really likes the weekly ones. Anyway, have a great Sunday. I'll talk to you guys this week, and hopefully it's a better week than last week.